Hello everyone, it is I, Cass, back with the second half of the market structure talk. So let's get right into it. So in the last session we spoke mainly about the larger price swings on this higher time frame chart. We kind of kept it very basic and just looked at what trends kind of mean and market structure with like just nice clear parent price swings and stuff, yeah. Major price swings. Today we're going to take a look at what I like to refer to as minor price swings. So they're just the smaller price swings that occur within the major price swings to, I guess, make up that bigger price swing. So a really good example of that would be just in here. So where we have this major leg from this major swing low up to this major swing high. We also have, smaller price swings within there that are visible, a lot more subtle, but still there. As you can see, there's a clear set of swings that make up that larger swing. Now, this clear set of swings is going to be a lot more visible on the lower time frame or on a lower time frame than this as a big kind of trend and as a big kind of uptrend, similar to what we're seeing on this time frame at the moment. But yeah, it's just good to know that each price swing or each major price swing is usually going to be made up of smaller price swings within the bigger price swing, and then equally some of these swings up here on the lower time frame are going to have smaller price swings that make them up, and this is kind of like your introduction to, I guess, the fractal nature of price. So let's just go down to a lower time frame and take a look at this area. So I'll just flick it down to the H4. Oh, cool. So as you can see, this is the area that we were previously looking at from the daily chart, and as you can see on the H4, it's a nice clean uptrend, very much like the uptrend that was actually on the daily chart, but we have like a smaller version of it, and we are now looking at structure within structure, and like I said to you, some of these swings up will be made up of smaller swings from time to time. So we have a swing up here, a swing down, and then in terms of just major swings, just a nice move up there. But notice how that parent swing is also made up of smaller swings. So basically, what we notice is that price pretty much trends very much like the higher time frame, and the P8 isn't necessarily any different simply because price is fractal. Same thing it does on higher time frames is the same thing that it will do on lower time frames and any other time frame. So what that means is that we can very much approach this time frame the same way that we would approach the higher time frame in terms of looking at it in terms of swings and market structure and overall ascertaining direction. So here's how we'll start to break this down. So basically, let's imagine that we for some reason felt like this area here was going to be a daily higher low area, and we felt like, yeah, we're going to have a daily higher low and price is going to start to push higher and gun for new highs. So if we had something like this, yeah, we had a daily, we had price come down into a key area that we felt like, yeah, price is going to make a daily higher low here, and then we're going to move. I guess my main question is, how would we know when the optimum time to go long is, as opposed to like, just entering the market at any point and then waiting, obviously days, if not weeks, before the market actually starts to move in our direction. We don't necessarily want to be boxed as swing traders or weekly chart traders sort of thing. We want to kind of find the best time and just how to know that yes, price is actually starting to go bullish from this high low area. So the answer to the question and the easiest way to do it is to usually come down a time frame or two and look at the market structure down there, because the market structure breaks on those kind of time frames will usually give you the first sorts of clues as to the market shifting in direction or reversing or like rotating. So I'll just bring it down to the H4 time frame here. Where are we? Cool. So long story short, as we move from this area sort of thing, yeah, before we can look for an upward movement, yeah, we would have to look for this downward movement to get down to this daily high low area from the daily high. We would have to look for that movement to end and then for an upward movement to start, and then obviously this would all have to occur via a market structure break. Once the market structure of the downward movement breaks, and we get signal for high prices and confirmation of high prices, then we can start to look to trade the market as an uptrend. We can't necessarily call it bullish until the structure breaks and we get some confirmations and signals from price itself. Now, in terms of a downward movement in this area here, if I was looking at it in terms of the major swings, I would apply my fibs would go my swings will go something like this from here down to here, back up to here for a lower high, down to this point for a lower low, very deep retracement back up for a lower high before moving down once again for a lower low. So up until this point, yeah, we have been moving down consistently, A, B, C, D pattern. So A, B, C, and then D, and then it starts again. So A, B, C, and then D. So what that means in terms of structure is generally this would have been the structure high at some point, and then down here would have been the structure low. And yeah, you know the rules. Whichever way price breaks is where that wants to go. So price manages to start to run down, break beneath the market, and then before making a final low and starting to retrace. So obviously this would have become structure low, and then this right here would have become structure high. Yeah. So obviously from this point on, we are now looking for the same thing to kind of rinse and repeat and see what kind of happens next. So once again, obviously price manages to run down and breaks beneath structure low, which would once again be a signal for lower prices after putting in a lower high. So structure moves down for market structure low on the H4, and then we get a market structure high at this point on the H4. Yeah, but obviously as we move down into this area, we are now at a daily higher low area. So like I said earlier, we are trading structure within structure. So all of this H4 structure that we're looking at is within the larger daily structure. So all that means is that we're coming into just the area where we are starting to anticipate our daily higher low for whatever reason. So from this area, generally we're looking for price to make a low and start to move up. If it is going to make a low and start to move up, all it has to do to confirm that to us is break the structure of the previous downward movement. So this is the previous downtrend that is intact from the H4 to get down here. We need to see the structure get broken. So we need to see this market structure high go to confirm higher prices. Not just confirm high prices, but break structure, break the downward movement to show me that the selling has most likely stopped, and then we can start thinking about buying. Bear in mind, any sort of movement back up to this point before we break this high is going to be classed as a retracement until we break the high. So that doesn't mean we can't take trades back up into the range and be bullish up into certain levels, but we just need to do that with an understanding of the overall structure. We can't call it bullish because it hasn't actually broken the high. Anyway, price manages to run up and puts in what looks like a good lower high. And looks as if it is going to actually start running down to break structure low. So I'm just going to move structure low across a bit here. So let me just... Mazarkit H4 market structure high, and then we're going to put in a H4 market structure low. Cool. So we can move that up a bit, that would be amazing, but it's going to shake me. Okay, cool. So we have our market structure high set in place, and we have our market structure low set in place. Yeah, so we know the range that we're trading within, and it's just simply the range that the market is set just simply the range that the market is set from the low and high points. Yeah. Now, obviously, price ran down as if it was going to complete the next ABCD, so as if it was just going to complete a new move down. So you know, for fairy's sake, it would have been looking something like this. Back up into here maybe, and then a movement down, just continuing the consistent downtrend that was there. But unfortunately, price actually ran to the bottom and didn't actually manage to make a lower low. So retail will call this a double bottom. This is actually just a higher low. But yeah, nice clean bottom. Price fails to put in a lower low. So that's going to be the first sort of signal or the first kind of thing that lets you know, okay, cool, the selling pressure is starting to become exhausted here. Because if we were to continue moving down, then really and truly, this thing should just run down and break beneath the low. Yeah. But price ran here and failed to get beneath there. So, you know, just kind of first signals that there's something wrong with the selling at least. Now, anyone who does have a bias for long or does want to get long, and they're looking for safe longs or confirmed longs, yeah, they're going to have their eye on this level here simply because it is market structure high. And they're going to be looking for price to at least get there, attack it, and close above it on a good day to signal some high prices for us. Long story short, price manages to run up at some point, comes back down, been ranging for a second, comes down, forms another higher low. So anyone who hasn't taken any trades from down here will be watching it in terms of body language for the range. We've gone from low to a lower low. Didn't get a lower low, so we got a higher low, and then we've got another higher low. So if anything, this area is now cupping and rounding off. Yeah, price then manages to get some gusto from there and run up and break above market structure high. Once price breaks above market structure high, everyone knows the deal there. That's the cue for higher prices. That's a signal for higher prices. So in breaking above market structure high, this would have become the new structure high, and then this baby right here would have become the new structure low. And yeah, same rules apply. Whichever way price breaks is the way that it wants to go, but obviously in line with everything that we've been looking for, and in line with the confirmation for higher prices, we're going to anticipate for price to move higher. So we're just going to anticipate simply a higher low to form. Generally, we're going to want it to form from most likely discount because we're going to want to see a squeeze on anyone who is long, but that doesn't mean it has to form from there. So price comes down, manages to form that higher low. Obviously, as we know from before, this break above this old structure high here is a cue. It lets us know something's coming. What is it that's coming? This new expansion here into new highs. If this uptrend is to be true, we're going to get a new expansion into new highs. So as soon as we got that breaking structure, everyone loads up their rifles, everyone loads up their shotgun, whatever it is that you like to go to war with. You load that baby up and you get ready. Make sure you're in position for that higher low to form. And then boom, from there we start to ride the move. Now, this is where things get important. Just because we're entering the market here, yeah, or we might get a decent entry here in terms of confirmed longs, yeah, doesn't mean that we necessarily just target levels like here or here or here, or whatever resistance level you feel like is above the market. And why I say that is because fair enough, we might have entered this trade or managed to get our entry from the H4 based on us watching structure and stuff, but we didn't plan this trade from a H4. This is not a H4 trade. this is actually a daily trade, because obviously, oh, you're gonna mess me up. Cool. So yeah, this is obviously a daily trade because simply based off the fact that we started off this whole thing by saying, okay, cool, we feel like there's going to be a daily higher low here. So we're looking for a daily higher low to form so we can trade into new highs. So going off the back of that same idea, once we do manage to capture our entry, or once we do manage to like ascertain where our entry area is going to be, when it comes to looking for targets, we need to remember that this is a higher time frame plan. So if you're trading from a daily higher low area in an uptrend, essentially what you're saying is that we should be getting a higher high next. So generally, you should be gunning for market structure high, or the previous market structure high, because price would have to pass this point to make a new higher high. So this generally just becomes like your first daily target. Yeah. So let's call this daily market structure high, first HTF target. Let's even boost you up a bit. Yeah. So basically, we have ascertained a daily area where we feel like there's a daily high or low going to form. Cool. We then came down to the lower time frame and watched the structure on that time frame to help us to find the optimum time for getting long, or for at least to help us to find a time when price is starting to confirm actual longs to us. Once we found this entry, or once we do find this entry, when it comes to targets, we need to flick back to the higher time frame to find where it is that we're targeting, because obviously it's a higher time frame idea that we're trading here. Now, what that means for these trades taken down in a 4 hour is essentially, when you do take a trade from here, I'm not necessarily now saying that you now have to swing the market. I'm not saying that you're now obliged to hold your trade to up here. What I'm saying is, when it comes to longs, longs are going to be valid into this level. Yeah, we're going to be looking to maintain longs into this level because we've come from a higher high, rolled down to a higher low via a downtrend. We ranged for a bit, and then we broke structure and started to trend upwards. Yeah, we've said that price is going to go from down here into a new higher high area. So to get from said price down here to said price at a higher high area, price is going to have to obviously move up, but it doesn't move up in a straight line. First thing we learned in the first lesson was if price moves up or down, it does it in a form of a trend. So as soon as price breaks structure and starts to trend upwards, we're going to operate on an if-then basis. We're going to operate on a it is what it is until it isn't basis. And all that means is that price is going to maintain this uptrend until it gets to this higher point, and there's no reason why it shouldn't. So generally, if you're like myself, you're most likely going to get in here and then close it out here, and then get in at the next higher low sort of area, and then close it out here, and then get in at the next higher low area, and then close it out here. And you're going to keep doing that until you get into your first higher time frame target area, simply because you know that once we get here, we've now passed the old higher high, so we're getting into higher high territory now. So off the bat, we're going to have to start driving slow. We're going to have to take our foot off the pedal, because we can't be gung ho low. We can't be gung ho long anymore, because we've moved into a daily higher high area. And just based off the laws of a natural uptrend, after a higher high usually comes a higher low. So we're going to be anticipating a rollover. But until we get into that first target area and first target level, we long in terms of being long this pair. I'm long in every higher low, because Euro's in an uptrend and I feel confident in this uptrend until we get to this level, sort of thing. So I might be chopping it in and out. If you're more like maybe Ash, or like some other guys in the team, or like even myself, sometimes when I feel like it, you might long it from down here, and then hold it, and then wait for a new high low to form, and then long it again, and then hold it, wait for a new one, and then long it again. If that's how you decide to skin the cat, good on you, sort of thing. But this is more about a general understanding of A to B. Yeah, how you decide to rinse the pips or take your pips from A to B is totally up to you. You can scalp it, you can hold it, you can do whatever. But the most important thing is the understanding of entering from the lower time frame, but then using the higher time frame for your targets and why. Because if anything, it gives you a lot of confidence in these sorts of areas. You're not just longing because you're seeing 5-minute stuff and 15-minute stuff. You're longing because you have higher time frame context. So it does a lot for you. Now, obviously, as price moves up, it's just going to be a rinse and repeat job, as we always kind of state. So that would have been structure high, that would have been structure low, higher low, push up, structure high, structure low, higher low, push up. Let me not be lazy, let me just push this in. Structure high, structure low, higher low, push up, yeah, and it's going to naturally continue doing that until it moves into this daily high territory, yeah. So price is above the previous daily market structure high, so we've clearly made a higher high, yeah, and we can start to anticipate that price might roll. Not that there's anything wrong with the uptrend that we have, but more so that for this uptrend to continue being healthy, we need to get a higher low, so it needs to roll. So, we would have got to a point where on the H4, this would have been the last market structure low, and this would have been the last market structure high. Yeah. So, just because we're anticipating a higher high doesn't necessarily mean that we have to get one. Price can put in its higher high wherever it wants. Sometimes it will continue to skip for quite a few hundred pips sort of thing, and then you just have to kind of just wait and bear with it. So if it was to continue going up, just run up and break structure high, no problem. If it was to want to roll over and start to move down, hair structure low, break it, confirm it to me, you tell me what to do, sort of thing. So on this occasion, price manages to completely slip and slide and break through structure low, yeah, confirming lower prices. So that's the market structure break, just letting you know that, cool, that's the first kind of clue that, yeah, we've once again had a shift in flow, and the market is rotating here, sort of thing. So as soon as we break beneath and close beneath that low, signal for lower prices. Yeah, obviously we would be looking for a retracement back into the range to catch a lower high. Yeah, on this occasion, price manages to completely slip and slide. This is probably a good time to point out to you that the same way that price comes up isn't necessarily the same way that it comes down, and vice versa. So what that means is that sometimes you'll get like a nice clean build up, nice ABCD patterns, nice kind of fib retrace stuff, picturesque baby pip stuff, and sometimes price will just be parabolic. It will just be very steep and just slip and slide sort of thing. That doesn't mean that structure goes out the window. It's still in there. It's just very, very, very subtle. So we get lower high, lower low, lower high, lower low, lower high, lower lows, lower highs, lower lows, and so on and so forth. It's just you have to pay extra attention, and a lot of this structure is going to be a lot more easily visible on the lower time frame because of how steep it is. Any sort of trend line movements that you're looking for will be found on maybe the 1 hour or the 15 on this occasion. So in terms of structure, as price moves down, broken beneath, so this would have become structure low. Right over here would have become structure high. We would have been looking for a pullback into the range, very shallow one, but they do occur. Price then slips once again, so we get a new structure low, new structure high. Would have been looking for a pullback, same thing, shallow one before slipping, breaking structure, signaling lower prices, so we get a push down, and then price basically sets a new structure low, new structure high, and once again the structure low and high deliver the range to us. So price starts to contract for a bit. It can't necessarily find direction. It's a wick in the bottom, but it's not closing below, so we don't have any confirmation for lower prices yet. And then we finally get some closes below here, which would have been the first kind of signal that, oh, okay, cool, maybe price wants to continue going down here because it's literally signaled lower prices. and we're getting like raised of the tops of these highs over here as well, which would have been like another sort of signal that okay, this thing is most likely to push to the downside. So this is some of that this is some of the body language stuff that we'll start to talk about when we look at contraction and expansion. But here we have a contraction happen after the break instruction to the downside. Price obviously manages to end up running to the downside with a nice clean run. But we have two things working here. We have market structure, so we have the structure high and low, and then a break beneath to signal the lower prices, and then we have contraction, and obviously the next phase that follows contraction is usually more often than not usually more often than not, is definitely expansion. So because we're contracting here, we're expecting an expansion to come. So that would have been two great pieces of confluence to help us most likely hopefully catch this trade down here. So yeah, the structure just keeps moving down. So we would have moved down until we get to this point just here, where we have market structure low being set, and then we would have had a market structure high just here from the new run down and the new range being created. So once again, if price is going to continue moving lower, break structure low. If it wants to run higher, just break structure high. But very similar to our run up here. On the run down, we've actually come very, 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 very low in the market in terms of the daily range. So once again, structure within structure. So where we've come very, very, very low, we've actually probably most likely moved into an area of a possible daily high or low, because we need to not forget that what we're trading here is a daily uptrend. So we've moved into discount of the previous range. So this would have been the daily market structure high now, and this is the daily market structure low. And we've moved down into the discount of the range. So the likelihood of us getting our higher low is becoming higher and higher, sort of thing. So in anticipation of this higher low, same rules apply. Like anyone who does have a bullish bias, they're gonna have their eyes on structure. Most importantly, structure high. Yeah, they're gonna have their eyes on structure high, waiting for that baby to break. As soon as structure high goes, then they have their confirmations to go long. Anything prior to that is going to be considered aggressive. Yeah. So on this occasion, price manages to run up, and we get a nice clean close above that level. So that's a signal for higher prices. Signal for higher prices would entail new structure high and then new structure low. So because we've had our signal for higher prices, we're looking for this new uptrend to maintain. We've had a break in structure for the downward movement to get down here. So because we're looking for a daily high or low, we're just on the lower time frame looking for price to go from a downtrend to an uptrend via a market structure break, which is giving us right now. Where this uptrend kind of starts, we're just looking for it to maintain. So we're looking for a higher low to form anywhere above this market structure low level. Price runs down, manages to finally squeeze in that higher low before gunning higher, and then we get our higher high sort of area. And then it's just a rinse and repeat job, really. So this would have become higher high, that would have become higher low, shallowest retrace in the world before we gun higher. It's a shallow retrace, but there's nothing we can do about it. Once the price kind of breaks structure higher, you just got to move your lines, new lines in the sand, and you keep it stepping. So that would become structure high. This would have become structure low, and we're just looking for this movement upwards to just maintain and continue, to be honest. So we're looking for a higher low to form anywhere prior to this level. And on this occasion, we get a run down and sweep of it. On this time frame, probably doesn't look like a sweep, but on the daily, this would be cleanly seen as like a wick beneath this level. So we get a sweep beneath it before that French election weekend, where price completely runs, gaps up, and cuts above market structure high. Same rules apply, really. Anyone taking longs from down here, when they're looking for their targets, where's their targets going to be? Previous daily structure high. So let me just move this structure back to here so we can see it well. So this is where we would have been structurally. So any longs being taken from here after confirmations of higher prices would have been looking for new structure high. So just here. And then this baby got to move That would have been a new target. So generally, this would have been the area that we would have been targeting. Notice how on the daily, there's no breaking structure at all. Even if you were looking at some of the more subtle price swings or some of the more minor price swings on the daily, there was no breaking structure until a very late point. Um, so, um, so I guess being more alert and using your H4 structure would have had you in somewhere closest to down here, as opposed to having to wait for structures to break up here, or more importantly up here. Now, that's pretty much it in terms of a clean usage structure. But one thing I do want to point out is I just want to pull us back to this area very quickly. Right, so on this movement down, I made sure to use the most apparent and clearest price swings to mark out structure. Obviously, as you get more experienced and as your skill starts to grow over time, yeah, you will be able to use some of the more subtle highs and lows in there as your structure points. For this example, I'm just going to use the highs and lows that actually formed the range at the bottom of this daily high low area. So let me just delete this quickly. So the range I'm talking about is just this sideways movement that occurred from about here to here, just for a couple days. Not even a couple days, probably like 2 weeks or so. Just for a couple days, price just literally pinged back and forth within this range before finally breaking out. Pretty much there would have been some people that would have drawn their structure high more so in an area like here, because they would have seen that as the final kind of structural point before price actually running down for this new high low, which is fair. Yeah. Now with that being their structural high and this being their structural low, yeah, as you can see, price actually manages to run up. Price actually manages to run up and attack this level, but it fails to get above it at all. I think these are even clean tops, yeah, which is great. Or I think it might have wicked it just about, but there was no like clean break of the level. And then price manages to run back and then do a fairly similar bit of price action, but we get higher up. We get higher up above this market structure level, quote unquote. So what's important about this is there are going to be times as you get more experience where occasions like this may be classed as a market structure break, because generally we don't teach or we don't advise for people to use this kind of price action as a market structure break, because there was no clean close above. It's not convincing in terms of risk. This is a more risky approach to take, yeah. And generally, this is actually going to be seen as more of a sweep. This is an action that is done when liquidity is to be taken from the market. But there's going to be a small percentage of the time where actions like this can be considered market structure breaks in line with the pre-existing market structure. So all that means is, the fact that we are forming a daily high or low. Yeah, we've come from a clean downtrend into a range, and we're starting to break upwards. In terms of highs and lows on this time frame, this is a higher high than this point. Why that's significant is because, like I said before, lower low, lower low, higher low, higher low. So we have a cupping off here, and we have lower high, lower high, lower highs, higher high. So we have a rounding off here, and these highs are failing to get lower. So these are the first sorts of signals to let you know, okay, cool, the market could be rotating. So using this as a market structure break would 100% be classed as a more risky approach, and anyone doing it understands the risk that they are taking from trying to, I guess, catch the meat of the move by using this as a market structure break. But if they are, that's their signal for higher prices. in line with the pre-existing market structure. That's a signal for higher prices. They may feel like this contraction is due to end and they want to get in, and they want to get in early. So they use this as a signal for higher prices. So naturally they're looking for, and they've got their attention now on the higher low to be formed because of the expansion to come. So obviously they'll be looking at the discount, the discount range of this upward movement. Price comes back down for that higher low, and then there would have been a high possibility for a decent trade up here to start this uptrend. So they could have possibly been in from all the way down here and caught this first leg, then caught the second leg, and so on and so forth. Obviously, same sorts of targets because daily higher low into daily higher high. But the 100% important thing for you to understand is this would be classed as the aggressive entry. Yeah, so this would be classed as aggressive, whereas this entry up here would be classed as conservative. So let me just box this off so it's nice and clear for you to understand. This would be classed. This would be classed as aggressive, simply because of a lack of clear confirmation. Lack of clear confirmation. So that naturally makes it riskier. Yeah, there's less edge. Lack of clear confirmation, so there's less edge. So it's riskier, if that's even how you spell riskier. We'll never know. Riskier. And then this is going to be classed as conservative. Yeah, conservative because you waited. Conservative because you waited for clear confirmation. Clear confirmation, signal for higher prices. You waited for clear confirmation, signal for higher prices. So there is naturally more edge, more probability of it coming through, and it is the less risky trade. Let's get that all onto the screen, why don't we? 14s, bang, and bang. Yeah, so this is going to be classed as aggressive simply because of the way that you came about the trade. Yes, you may get the meat of the move and so on and so forth, but this is going to be classed as aggressive simply because you haven't waited for certain confirmations in the market. And then this entry up here is going to be classed as conservative, simply because you have waited for confirmations. Fair enough, you may get less pips in terms of the size if you were to swing it, but the pips that come from this sort of area are going to be more guaranteed. So it depends on what kind of person you are. Some people like to live on the wild side, some people like guaranteed P's, some people like both. So, you know, make it that what you will. But yeah, it's just an understanding of what you're doing. There's nothing wrong with either approach. You can do what you want, but just understand what you're doing. When you take entries from areas like here with less edge, less confirmation, when you get slapped, don't cry. Don't cry. Know that, yeah, that was a risky trade and I knew what I was doing. That was a big risk sort of thing. But yeah, apart from that, I think that is pretty much it for that. Oh no, cool. There's one last thing that I wanted to point out. So pretty much just a quick look at, or a quick understanding of the magnifying glass concept, yeah? So it's nothing complicated at all. Same way that we were on the daily chart and we said, okay, cool, we feel like there's a daily high or low that's going to form here. Yeah, and we're going to look for price to most likely push up. So then we came to the H4 to get precise on that idea, yeah, to help us look for the first clues, the first breaks in structure, to get to get a nice tight entry on that daily high there. So we ended up maybe getting in, we ended up getting in this sort of area here in our eye there, yeah, to run it up, yeah. We pretty much magnified this daily high low area to look at the structure in more detail to obviously get a more precise entry. That's the same way that we could generally, so if we were saying, okay, this is the daily high low area that we got more precise on, yeah, it's the same way that we could, oh, what's going on there? It's the exact same way that we could, once we do find our H4 higher low area where we feel like, yeah, this is the confirmed area because we have all of our confluence and confirmations. It's the same way that we could magnify. We could can't speak today. Same way that we could magnify this area by going down to maybe the 1 hour or the 15-minute and looking at the structure in there. Essentially, from this session, you should be able to understand, and from understanding or starting to understand fractals and the fractal nature of price, you should start to understand that there's no real general difference between this and that, and yeah, let's do this. This and this at all. This is just a bigger version of this happening. So the same way that you would try to get long from this daily movement down by waiting for a market structure break on the 4 hour to get long on the big movement up, is the same way that you would go to a lower time frame and then wait for this movement down on the H4, yeah, to end via a market structure break, yeah, and then catch a nice little decent entry on there to get long on this H4 movement. So daily movement, market structure break via H4 to trade back up, H4 movement, market structure break via a 1 hour or a 15 to go up. Exact same concept, exact same way that we've walked through every kind of market structure, way that we do things in this video. Is the same way that it applies down the time frames and up the time frames. You just transpose the same concept sort of thing. So yeah, a couple of things for you guys to think about. I hope that we brought some value to you today, and let us know what you think in the comment section beneath this video. And yeah, man, tweet us, interact with us, let us know what's good. Have a good evening, people.